Good morning, everyone. This is Jeff Wild. It is Sunday, December 6th. I want to go over a quick trade setup video from my market reversal levels from the past trading week. We're going to look at a Euro US dollar 30-minute short. And this is a classic setup, okay? If you'll notice that the market made a swing high here and another one here. But notice that the stochastics were making lower swing highs. So this is the stochastics divergence sell setup. And as I've talked about in the past, I like to enter on inside bars. There's other candlestick patterns I like, but this is one of them. So you have an inside bar here. You would be shorting below it in this area. Now, as you can see, this thing took a lot of hours to start to unwind in your favor, okay? This, unfortunately, is the nature of Forex trading. Sometimes it can take hours or a day to really start to move, and it really sucks when you're sitting there because you don't know how long it's going to take to move in your favor. Ideally, it should move very quickly, but there's times where the market is congesting and trying to make it up its mind. So that's where the challenge comes into trading, okay? Some of you might have scratched this trade because you had to go to work or whatever. You saw it wasn't going anywhere. You saw it was going sideways for a lot of hours. If you scratch it, that's okay. If you had more patience, you would have got some money out of this trade. Now, let's look at another trade. Notice that we have one swing high, a second one, and a higher one. All right. Notice that the stochastics, we have one here, slightly lower one there, and then another one there. That's called a triple divergence, even more powerful than the standard one. And then notice we have an inside bar here. That's our entry, so we short below that bar. Now remember, this is our market reversal level here. Now, as we start to see this trade unfold, what actually happened is you can see that there must have been some news or something, or maybe the market makers, somebody was running the stops, because you can see that there was, in this bar here, it kind of spiked above that previous high. So if you had your stop too close, you would have got stopped out. But you got to give in especially on a 30-minute time chart, a bit of breathing room, okay? Now, one thing I want to point out is, and this happens in all markets, there are occasions where you feel you have a really perfect setup and you see what just happened, okay? In other words, you'll see that perfect setup and you get stopped out, but all of a sudden it starts to quickly resume in the favor that you thought. Okay, as you can see in this candlestick, it spiked up and then quickly started going down. You need to really be aware that when they were running stops, and if so, if you did get stopped out, you have to entertain the idea of getting back in for a second try, okay? And then eventually this thing started on the line, but notice once again, as you're sitting here, you're slowly working down in your favor, but it's taken a lot of hours, okay? And then the thing just falls off a cliff, all right? I think there was some news or something like that. All right, it's because the dollar had its strongest day in a long time. I think since June, I believe, or something like that. But anyway, look for the classic setups. You have to be patient. And, once again, money management is such a big part of this. I don't want to go into money management now. I want to keep this video short. But I can't stress it enough. I've been doing these market reversal levels for 3 years now. These setups happen over and over again. On a week where you've got a lot of volatility like we've had, there's the possibility to grab 100, 200, 300 pips when you're trading a few hundred or a few pairs. So pay attention to it. I'm still giving this stuff away. Learn from it and profit from it. So listen, have a great trading week.